Good morning. Welcome to Stock Market Today. It's Tuesday, June 18th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities finished slightly higher, though off the best levels of the day yesterday. REITs, communication services, and energy outperformed. Materials and financials lagged. Treasuries were mixed with the curve flattening. Dollar was little changed on the major crosses. Gold was down 10 basis points, and WTI crude settled down 1.1%. So again, your outperforming sectors were REITs, comm services, energy. Throw healthcare and tech in there to round out the list of top performers. On the downside, the underperformers were materials, financials, throwing utilities, and industrials and staples. As we get to the desk this morning, though, futures are up 50 basis points to start the day. Asian markets were mostly higher overnight, though Japan did lag. European markets are seeing good gains as well. Treasuries are stronger across the curve. Dollar is stronger against the euro, but lagging on the yen. Gold is up 50 basis points, and WTI crude extending yesterday's decline, falling by 60 basis points here to start the day. So I wish I had something exciting to say, but honestly, nothing happened yesterday. We're still consolidating ahead of the FOMC meeting this week, and we traded in a very narrow range yesterday. As a matter of fact, I saw a stat that said yesterday may have been the narrowest range day of the year for the S&P 500. So what does that mean? It means everybody's kind of sitting on their hands, waiting to see what the Fed is going to say. Now, we've got a little bit of a bid to the market here this morning. That's encouraging. But honestly, we can say that expectations are high in front of this Fed meeting. The real question is, to me, is will Jerome Powell be dovish enough for the market at current levels? I don't think there's anybody on the planet who doesn't think Jerome Powell is going to be dovish. The question is will he be dovish enough? Has the market's move to start January, both in the equities as well as in treasuries, already discounted a dovish expectation? To me, I think that's a real possibility. I think there's a less than trivial chance that the announcement tomorrow becomes a sell the news event, especially in light of the fact that if you're reading our notes at Chaikin Analytics, you know that based on our process, our model, and our indicators, in particular our indicators, our overbought, oversold indicators, all the major markets are overbought in front of this event. So it's just something to keep in mind. Support for the S&P 500, 2,800 to 2,850. Resistance, 2,900, 2,950. RSI remains in bearish ranges, and Chaikin money flow remains neutral to bearish. So what are we talking about? Our market in a minute. In the note today, we are talking about how stocks trade in a narrow range with the Fed on tap. We hit on that already. Defensive sectors continue to lead the way with some signs of cyclical improvement. We go through our relative rotation graph in our note. So for those of you who are getting the note, you'll have all of that information. The rally in healthcare is stalling out. And futures, as I said, do point to a higher open here today. Taking a look now at the power bars. Remember what the power bars tell us. They tell us how many stocks in each index or ETF have bullish ratings, neutral ratings, or bearish ratings within the context of our 20-factor model at Chaikin Analytics. So the Dow is skewed in favor of the bulls, 7-4. S&P 500, flat performance. There's that flat performance yesterday. 118 bulls, 69 bears. NASDAQ up 60 basis points. Nice outperformance yesterday. 21 bulls, 13 bears. Small caps outperform again. 435 bulls, 360 bears. Bonds uptick, sending yields lower. There's your outperformance of comm services. 9 bullish or very bullish stocks for 1 bearish or very bearish stock in the communication services sector. That group outperformed yesterday, trading higher by 1.14%. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Major markets across the board are mixed. Now, every day on this show, our algorithm generates a stock of the day. I do not pick the stock, and I just want to make that clear. The stock is auto-generated, but I analyze it for you, and I take you through our process. And today's is Schnitzer Steel, SCHN is the ticker symbol. Closed at $23 even yesterday, up 70 basis points, so a nice outperformer. Schnitzer has a very bullish Chaikin power gauge rating due to attractive financial metrics and strong price volume activity. When we take the 20 factors from the model, 5 in each of these 4 categories, we come out with a very bullish rating. So what do we have? A very bullish stock, strong trend, strong industry group, type of name we want to consider, but then we run through the analysis. And for those of you who are longtime watchers and listeners of this show, you know we're not buying it, right? Here's the bullish rating. That's great. But what's missing? Relative strength. The dynamic duo. Bullish or very bullish stocks that are outperforming the market. Those are what we're looking for to add to the portfolio. We have a very bullish stock, but it's underperforming the market. We're not getting involved in a situation like that. Add to that the stock is overbought. Money flow is bullish. This is an interesting name here. I'm going to keep it on my radar because it's making the turn, or at least it's trying to make the turn. Stock has been in a pronounced downtrend and now starting to stabilize and potentially moving sideways. Certainly makes sense to pay attention to it because if it stays very bullish with bullish money flow and begins to outperform the market, then it kind of looks compelling as a long idea. But right now, we are not there on Schnitzer Steel. Add it to a bullish watch list, wait for outperformance, but we're going to stay on the sidelines on that one here today. Taking a look at our sector tracker now. The movement of the major sectors over the last 5 days. And after a brief counter trend moves, we have our defensives back up near the top of the list. Over the past 5 days, now communications is being helped along by internet stocks, and that's fine, but real estate and utilities are in the top 3. Discretionary's had a nice bounce here. We go through that in our note today. Thank you, Amazon. A lot of Amazon strength in there. Remember, consumer discretionary, the sector, is 24% Amazon. Healthcare, staples, and energy are middle of the road. At the bottom of the list, the financials. This decline in yields has really held back the financials. And it bothers me to no end because our model is bullish on financials. Bullish on the banks, bullish on insurance, bullish on financials as a group. Now, I've loved insurance, and that's been the place to be. But I want to get bulled up on the rest of the space. The problem? Relative strength. Same way we look at stocks, we look at the sector ETFs. And from a relative strength standpoint, it's just not there yet for financials. Tech, we talk about how we're seeing a little bit of profit taking. Remember 2 weeks ago on the show, we highlighted XLK, said it was testing support and was compelling for an entry. Well, you've got a nice 2-week rally, starting to give some back. Could see a little bit more profit taking, but bigger picture trend in tech is higher. We want to continue to see tech do well. Industrials and materials, fine. So those are the 4 groups that are lower over the past 5 days. But speaking of financials, I mean, here's your industry in focus is regional banking services, which over the past 6 months has underperformed the market by 3.5%. So we got an underperformer, right? But look at the ratio here, 40 bulls to 17 bears. Power bar ratio is strong, and that does measure future potential. So I do want to get there, but I have to keep an open mind, and I have to follow the process. Just because I want to get there doesn't mean I'm going to go there. Let that sink in. The market doesn't care what we want. The market gives us situations, and it's up to us to take advantage of them. Regional banks currently ranked number 8 of 21 subsectors, moved up 1 slot over the past week. Some names to think about there: QCR Holdings, Renaissance, and Citizens, all with very bullish Chaikin power gauge ratings, and all not outperforming the market. So let's take a look at KRE here. Here's the regional bank ETF, and you'll see what we're talking about. And I mean, so much so that it actually triggered a relative strength sell signal today. So KRE, the ETF for measuring the regional banks, has a neutral Chaikin power gauge rating. Now, I'm willing to look past a neutral rating if it's outperforming, but it's not. Same analysis. Been an underperformer for most of the past 12 months, with the intensity of that underperformance picking up of late. Overbought, bearish money flow triggered a sell signal. This is why we run through our process, because it'd be very easily to just kind of look at this power bar and say, I want to own the regional banks. No, you don't. That's why we run through the process. It's also why we manage risk. KRE, I want to like it. As I said, I want to like the banks. We're not there yet from a relative strength standpoint. We're going to continue to watch. Looking at what's trending now, yesterday's S&P 500 gainers and losers are movers and shakers. Small and mid-cap biotech caught a bid yesterday with Pfizer buying Array. Sent INSEE higher by 5.3%. Facebook rolling out a digital coin. Follows through the upside, up 4.24%. Mosaic up 4% on an upgrade. Dish, rumored to bid for some assets that might be divested in a Sprint T-Mobile deal. That sent that stock higher, 3.86%. No real news on News A. Align, LGN, bumped from the IBD 50 list, down 5.5%. Tyson, poultry stocks under pressure as swine flu not impacting pricing as much as people originally thought. ECL down 4%. Didn't see any real news there. AMD, bullish stock down 3.5%. Chip stocks just remain under pressure. And Ameriprise, this is another one of those financials that we've wanted to like. I want to like it. I do. Down 3.74%. Does have a very bullish Chaikin Power Gauge rating. Well, look at the REITs. Remember now, it's Tuesday. It's sector rotation day. It's relative strength day at Chaikin Analytics. We're looking at the relative strength of the major sectors. Real estate, another new high. It's not exciting to talk about REITs and utilities, but it is exciting to talk about what's working. It is exciting to help our clients be positioned in the areas of the market that are most likely to outperform. And we've been unabashed bulls on real estate, and it's paid off for our Chaikin Analytics clients. Here's XLRE going to a new 52-week high above the 200-day moving average, and a move that's confirmed by momentum. RSI has been in bullish ranges. Notice how RSI has not been able to become oversold. Momentum is with the trend. Look at the absolute outperformance here. Nice steady uptrend and then a breakout and starting to move higher. Simple process, folks. Simple process. Real estate's been an outperforming industry group. It's been an outperforming sector. We've been highlighting names in the group. We've been highlighting the group in general. On all of our calls with clients, we've been telling people to pay attention to real estate. And to the extent they have, their portfolios have been rewarded. Consumer staples remain leadership. Now, we looked at this yesterday. I'm just going to look at it in a different way today. For those of you who don't have access to our Chaikin charts, but do use stockcharts.com, I want to lay it out for you. So here's XLP on an absolute basis. Nice, steady uptrend above a 50-day moving average, above the 200-day moving average. Pulled back, tested support, and now rallied and broke above new highs. Trading up here near 52-week highs. Again, RSI is our tell. Has not become oversold. We can make the case that it hasn't become overbought either. So we do have to pay attention up here. With the stock up here near 52-week highs, with the fund rather, up here near 52-week highs, we want to see some overbought conditions. Not there yet. Could we see a consolidation? Sure. But the group remains leadership because here it is on a relative basis. Nice, steady uptrend. Outperformance. Defensive positioning in the marketplace. Helping the consumer staples. So I know we looked at this through the Chaikin lens yesterday on this show. I wanted to give you a different way to look at it using stockcharts.com. Healthcare stalling. What are we looking at here? Healthcare relative to the S&P 500 has had a nice rally. And now we're kind of stalling out below resistance, below the 200-day moving average. Notice, though, after becoming massively oversold, RSI got down near 10. The ensuing rally could not produce an overbought condition. That's troublesome to me. I don't like that. I think it makes sense if you've had some good profits in healthcare to take them off the table. I also think it makes sense to look for some weak groups within healthcare for bearish opportunities. You can see here's healthcare on an absolute basis beginning to roll over. And finally, I'll give you a bearish trade idea. FANG, Diamondback Energy, my bearish stock of the day today in Chaikin Analytics. Bearish stock underperforming the market, becomes overbought with bearish money flow and triggered an overbought sell signal. I like that trade. And today is Tuesday. I publish my survival guide. Everything you need to know for surviving and thriving in any market environment. Head over to chaikinanalytics.com/survival-guide. See you tomorrow, folks.